Hi guys, in this video I'd like to share the results following an episodic pivot catalyst analysis. There's a lot of information ahead, so I'll jump right into the topic. Here are the open questions covered later in the presentation. We'll look into how the catalysts impacted the price action, what are the main type of catalysts after reviewing 6 years of historical data, and the last one, is there a correlation between the episodic pivot, SPY, and IVM? To do the study, I started from a database of 1018 episodic pivots which were identified during a deep dive. Then I arranged the EPs in a chronological order and fine-tuned a bit the data, so I ended up having 965 episodic pivots for this particular study. What I did next was to see when exactly the episodic pivot or the gap up happened, and then using historical data from the news websites, I tried to see what was the exact catalyst that triggered this significant gap up or move upwards. In addition, for each stock, I tried to put side by side the SPY chart and IVM chart to see in what relationship there was the episodic pivot and the stock in its upward move compared to the general market. You guys are asking me what tools I use for this kind of studies, so here they are. TC2000 was used for the charts, Seeking Alpha and Breathing.com were the news database and resources that I used to find the catalysts, and Snagit was used to do the print screens. At the moment when I record the video, there are no marketing affiliations on my side with any of these resources. Let's jump into the first question, how the catalyst impacted the price action. I'll start with an example when the catalyst is stronger than the market. We'll look into this particular catalyst. We see on the market a significant correction in the next 20 days after DCP happened. However, when we look at the stock itself, we're talking here about QNST, which had as a catalyst the financial results announcement. In this case, they announced better than expected revenue. The revenue rose 33.3% year over year. And in addition, they had an upside guidance, which served as a good catalyst and overall positive energy to move the stock upwards. This is even more impressive when we look at the stock compared to what SPY and IVM did. In this case, SPY did a very choppy move and significant move downwards, while the stock step by step had the energy to go upwards. Next example will be a situation when the catalyst is exhausted under market pressure. We're talking now about this particular EP, and what we see on the general market is another significant market correction. When we look at the catalyst, it's also about earnings announcements. The company in this case was NUS, so No Skin, which announces that they beat on revenue. They also declared dividends. And in addition to this, they top even the highest estimates turned in by analysts. So reading this news, I could create the expectation that this stock will continue to have a significant move upwards. However, when we look at the chart, this was not the case. When comparing the stock performance with the overall market, we see that in that period there was a market correction, and what I assume is that the catalyst was exhausted under this market pressure and started going into a downward move. The last example I'll try to share is the one related to a government policy catalyst that is impacting an industry. In this case, a good example is what happened in August 2022 when the US government approved an energy and climate change bill of a total of 369 billion. This generated an upward move and served as a good catalyst especially for the solar stocks. For example, SunPower, after the news was announced, did a significant move upwards. First Solar did another impressive, significant move upwards. And then Plug, another nice move upwards. So we see a good example of a government policy change which serves as a catalyst for a specific industry. In this case, it was solar industry. All the 965 catalysts reviewed with the charts and side-by-side comparison with SPY and IBM are available in the link on the description. I advise you to read through those because they represent a good database to better understand how a news and a catalyst could influence the price action of the stock and the relationship with the general market. Moving forwards to the next question, what are the main type of catalysts? And having these 965 episodic pivots and finding their catalyst, what I tried to do next was to aggregate the data in order to see if I can find a classification and another perspective to the data that I collected. So here's what I could find and how I could classify the data. In 700 situations, and it's surprisingly high number of cases, the EP was actually generated by the company announcing their financial results and financial performance. I called this group beats on earnings, and it was related to sales, beats on sales, on revenue, on profit, issuing better guidance. So yeah, all related to the financial performance of the company. Then next, 43 situations were good news related to company activity overall, signing a good deal, new leadership, going through a restructuring, lawsuit settlements, overall good news that were perceived by the market as a positive impact moving forwards. 26 situations were when the company itself is making an acquisition offer or confirming an offer on acquisition, which is again perceived well by the markets. 21 situation, the company is being acquired, also perceived well by the market. And then a smaller amount of episodic pivots, but still worth mentioning, were classified as following. 15 of them, industry momentum due to a government policy, peer results, or external factors. As an external factor, 89 situations were when Pfizer and BioNTech announced their vaccine trial. However, those 89 situations were excluded from this particular study. 14 situation, there was a good perception when the company was added to the small cap or mid cap ETF. Then 13 situations, the company is evaluating or confirming a merger. The SPAC mergers were also included in this group. And then 13 situations, the company is receiving an external investment. This is how I try to group and classify all these 866 episodic pivots. And what I was surprised right away was how many of the episodic pivots happened due to the beats on earnings, and that means they happened during an earning call or right following an earning call. And after doing some calculations, this is it, possibly the most important statement and conclusion following this catalyst analysis. More than 80% of episodic pivots happen following an earning call. Knowing about this tells right away on what I should do and what I should not do. For example, I should possibly focus more on earning calls, maybe attend them, review the data, and preview the earning call results. And then that also means earning calls are most of the times announced in pre-market or post-market, which means most likely I will also have to trade soon after the earning call announcements already in the pre-market space. So that's also another thing I was thinking about. And then one not to do is reading in the morning news, some random news, or in the evenings with the expectation that I will find some news that will be the episodic pivots of tomorrow. is most likely not worth doing because the most important episodic pivots and news that generate gap uppers are announced during the earning calls. Well, knowing this, the next question I asked myself was, what is the effort required to watch the earning calls? There are in total like more than 6,000 companies, so watching earning calls at 6,000 companies per quarter is not the best idea. So I'll try to look if there's a way to simplify the data. And actually, based on the previous deep dives, what I know is that top 5 sectors, it's technology, consumer discretionary, healthcare, industrial, and communication service, are responsible for 792 EPs in the last 6 years, which means 132 EPs per year. Well, if I take these 5 sectors and add a filter on top, based on the data from today, if I add 100K shares per day, no biotech, stocks and ADRs included, market cap between 300 million and 20 billion, I end up having a group of 1,080 companies that I should watch for in terms of earning calls, and that results in a total of 4,320 earning calls news to read per year to find 132 EPs. Well, knowing this number, there is something I want you also to be cautious about and to ask yourself this question I'm also asking myself and looking into: is it worth it? Is it worth this huge amount of effort to every quarter to read 1,080 earning calls and to watch closely the earning calls just to find 25, 27 episodic pivots? I don't have yet an answer to this question, but I will advise you to think about it. Next question I looked into is there a correlation between episodic pivot, SPY, and IVM? Here is an example where I consider the stock and the general market, SPY and IVM, being in a correlated situation, because the stock goes downwards, the SPY also goes downwards. Then there's 3 days upward, 3 days upward, significant move down, sideways move, and so on. So this type of situation I consider as, yes, the stock with an EP and the markets are in a correlated environment. And then situation like this, when the EP does a significantly different trajectory of price action compared to the general market, I consider them as not correlated. When counting all this 900 something episodic pivot, this is what I found. Even if a bit subjective, this is what it is. So 488 EPs showed were significantly correlated with the markets in the next 20 days after the EP, so more than a half. And then the rest were more independent in terms of price action. How I read these numbers is that means that for half of the stocks where the EP is so much correlated with the general market, it's very important to watch what the market does in the next days after you enter into the EP, and the situational awareness of the general market will impact significantly the performance of the episodic pivot. Knowing about this correlation, the next question I asked myself was how many days the EP runs based on catalyst energy. This news that is creating the Gap app has this energy, but how many days it lasts. So running and calculating through these 900 EPs again, I was surprised to find that in most of the cases, the catalyst has enough energy to push the stock upwards for 1 day. So it's 1 day, 416 stocks, for 2 days in a row, 169 stocks, 3 days, 107 stocks. So we see that within 3 days, most of the catalysts will exhaust their energy, which means that in most of the cases, I should go out of an episodic pivot within 3-4 days. And it leads to me to this conclusion: Catalyst is in most cases not as strong as expected. For an EP to run a bullish market environment is required. Something that was suggested by the previous deep dives I did on the episodic pivot setup, but again, this was suggested when I had a closer look on the catalyst as well. The main takeaway of the catalyst analysis was possibly this sentence, and this statement: more than 80% of the episodic pivots happen following an earning call. That's why what I will try to do next, and knowing that earning calls happen in the pre-market or post-market, is try to look into the 5 minutes chart to see what window of reaction and how much time I have to enter in a stock, and how the volume comes into the stock, and how the price go upwards and how fast it happens, to better understand what will be my window of available time to enter in the stock, and what will be the best moment to enter in the stock. That will be the next study I'll look into. If you found the information useful, please give it a like and subscribe to the channel so that you don't miss the previous presentation. Well done for reaching up to the end of the presentation. Thanks a million for your attention. Wish you a great day. Peace.